Well, hello. Good afternoon, Maverick traders. It's the 30th of January. One more day left for the first month of 2024. We'll be behind our belt. Joe with you here on a Tuesday. Let's jump into the markets. The first thing I'm going to do is talk about meaningful news of the day and any sort of news coming up. And that news is going to be the FOMC meeting tomorrow. Let's break down the technicals, although they haven't really changed over the last week or so. And we'll take a look at the heat map along with any sort of trades we can share with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, you're going to see what we got, what you usually get on any sort of a Fed week, coming from Monday to a Tuesday into the Fed Wednesday, is push-pull. And what I mean by that is let's just jump over to how we finished today. The Dow, the S&P, and the Qs are a little bit off, right? The Dow actually came ahead with a gain of 0.35%. The Qs and the S&P were, I'm going to call that flat. The Qs down just over 0.5%. Russell's down 1.75. Oil put in a bounce today of plus 133. Understand it was down about that yesterday. So that's what I'm talking about with the push-pull. Gold actually pushed a little higher at 1.44%. But what we're seeing is when we get to the sector heat map, I'll elaborate, but it's kind of, whatever we did Monday, let's make sure that we take care of it Tuesday because we got to get to as close to as neutral as possible on a Wednesday. And what do I mean by that? Let's take a look at daily news. Sentiment remains bullish as all three majors test and extend into new highs. Nothing's changed. It's bull, it's bull, it's bull. We've got earnings coming out from a couple of companies. Even Tesla, that got beat down quite a bit, had decent earnings, but projected lower. I think the newest out today that I saw that was over the headlines was GM. GM had a massive quarter, really surprising. A lot of gapped up as well. So I'm seeing a lot of glass half full reactions to most of these earnings. It is still led by the big tech and the communications. I want to add communications in there as well. Nothing's really changed. It's just more of the same. We have seen, but over the last week or so, and I did want to add this, is over the last week or so, we've seen a bounce in some of the lagging sectors. A huge move in energy over the last 5-6 trading sessions into last week. Big move percentage-wise. So, but is it just an oversold bounce, or it's just this last push to buy whatever you could off the bottom? But we are seeing a lot of that happening at least over this last week. And I truly believe it could be just the anticipation going into the first Fed meeting, end of the first month, and getting in the depth of, or I should say, into the meat of the earnings season. Advanced decline line, 58% declining, 38% advancers. If you take a look at Corey's class yesterday, that's pretty close to opposite of what it was yesterday. I can't look into anything on Monday, Tuesday going into a Fed Wednesday, but I'm not. I can't change, I should say, my outlook. I have to stay where I've been from the previous week. Above, below the 50-day moving average, 68%. Above, 32% below. That has been 670-30, somewhere around there for quite some time. So let's just jump straight into the charts here and get a little deeper, because I'm not really seeing too much of anything that's changed for me over the last little bit. We're still at this level of resistance, or above that 480 mark, at least here on the SPY, and along with having a very bullish move to the upside. Now this is extending itself. We are seeing a little bit of decline in the volume as this happens, but the only thing this is going to make me do is stay at a +1 for the week, but I am still definitely +3 for the month, and that hasn't changed, and thank goodness it hasn't, because if it did, we might have been hurt. That's why we just go with the flow and try not to anticipate anything that might, could, or should, right, based on our opinions, happen. Let's just follow what's in front of us. It's pretty easy to do if you stick with that mindset. So not much has changed, just a little bit more extended here on the SPY. I noticed that the Qs are a little different. It is actually more shying away. This is the darling stocks, the big tech, the heavy communications that have been leading everything. And it's interesting to see that I see a lot of green in technology and communications when the markets have a good little surge, and then I see a little red the next day. But I need you guys to focus on this area here specifically because it hasn't done anything. It is still well above this resistance area. I'm going to draw this line here, about the 412, 412 and a half, 414, whatever you want to call it. Whatever that ascending triangle pattern here that it broke with, these moving averages are just beautifully pinned at a 45-degree angle. Sure, we got a little decrease in volume, but nobody's selling it. They buy into it for a day, and then the next day they sell a little bit. Buy a little, sell a little less. Buy a little, sell a little less, right? So we're keeping this high base, this tight move. The SPY is going straight up. The diamonds, actually today, the Dow was the bigger gainer of the three, but they're kind of all falling into the same area. We're setting new highs. We're breaking into those new highs each day going into a Fed meeting. That's it. Nothing to look past that. Nothing ominous, nothing to worry about. It's just what it is. We need to stick with our outlook. Here's our heat map, and this is also just kind of relates to what we've seen over the last few days. If you pull up over the last couple of updates, you've got communication services. I'll keep consumer cyclical out of it because consumer defensive has actually been pretty weak over the last little bit. And it's got this nice green today, but communications and technology had that. I've got a little bit more red. Here we are back in the energy, showing a little bit more green. The financials have actually been doing pretty well. If you take a look at the sector itself, it's showing a lot of resilience and some strength. And that could just be because the expected activity of trading and purchasing stocks, because the economy is growing and we have a very active, strong consumer. That's just a fact. So we'll play it, right? So how do I feel? Same as I always have. +1. You could go to 0 if you want to be a little tighter, but I don't want you guys to. I just don't want to get you in the habit of, look, I got to start shorting some of these extended runs because you could get slaughtered pretty quickly. Stay with a plus outlook. Stay with positive outlook. If you see something that quote-unquote feels overextended, leave it alone. Leave it alone. If you're not going to buy it, that's fine. But please don't short it. There's just too many small opportunities to gain on the short side, and you're really trying to hit that bullseye from far away. Why don't you just throw a big dart at a big board, and if you come close, you can make money, and that's to the bull side. Nothing's changed. Let's take a look at some of my potential trades. These are ones that have been thrown around for the last couple of weeks. NRG has been actually on my bull side for a while. It's extended into new highs. Disney's one that has emerged. It actually is breaking above a resistance level. It has earnings on the 7th, I believe, of February. So just be leery of that. But FYBR is one that I'll show you here. It's past its earnings, and it's an interesting chart. ONON is still on the neutral side. We've done this before. We've had a neutral stock that stayed with us for weeks and weeks and weeks and weeks. So I kind of want to see if we can develop that same pattern, although I did see PepsiCo, PEP, also showing a pretty good, more of an up move. If you take a look at it, folks, it could be in the bull side, but I believe it does have its earnings as well coming up on the 9th of February. It's coming up pretty soon. But we'll take a look at ONON again. And then on the bear side, Mosaic, Newmont, we've got our basic material stuff. CELFH, this is the one we're going to look at. Roblox, which is a darling that's kind of rolling over, could be an opportunity. eBay could be. Riot could be. These are ones that I've seen setting a lower pivot high with crossing stochastics. So just look to them on your own. I didn't really go deep into the earnings on those as well, but we'll take a look at CELF. So let's get started with our bull. And this is, I like this. What I like about this is it's just simple. It's just this, hey, we pulled back and it's moving higher. This could easily be a double top, right? Top of this box that just rolls right back into a range. I'm okay with that. If it can't base and break out, I'm not going to enter it in anything more than maybe a target butterfly or something horizontal. Right? Maybe a 26 horizontal would be something to do in the shorter term if you want to do it now. However, I got to see if this pulls back at all or if it bases. So it's early yet. That's why I said this was an interesting stock to look at. It's Frontier Communications. It's in a strong sector. Maybe that's why it's being kind of held up here. But I like the 20 and the 50. They are flattening. But as they pinch, they can consolidate and create power to where it can gain strength to break. So why I said this is an interesting trade, because it's not a today trade. It's not today. This is something that you might want to play. Maybe do it as a horizontal for 1 or 2 weeks. If it has the ability to do that, I didn't check its options. And then play it as it breaks out. Or maybe to see if it'll pull back to what would be neat is that 20-day moving average. And then maybe Move a little bit higher from there up to that area. Sorry, folks, I shouldn't have done a box there. I should do an area. So from that box, an arrow there, up that high, break out above that 26 area for an entry. Could be a fun trade. So that's a, I don't want to say a immediate watch list, but a distant watch list. A distant watch list. It does have decreasing volume here. You guys can see on the bottom. So just be patient with it. Moving over to the sideways side, this is ON, and once again, we found something that has stayed within our range. I'm not sure if it was on 2 weeks ago, but I know it was on last week, and this is Tuesday's candle from last week. We talked about this exact 29, 26 area. Look what it did. Looks like it was going to fall apart there coming into Wednesday of last week, but then Thursday, Friday, Monday, Tuesday, we're right back in the median area. So condors were working here. Maybe, I don't know if you want to go too deep on a butterfly, but somewhere in outrange or credit spread, some sort of credit spread above and below might be kind of fun for subsequent weeks. Let's jump over to our bear, and this is going to be Celsius Holdings. This also does have a little bit of a time constraint. I had difficulty trying to find an area for it to break. And it turned out I went all the way back here into August, and if you draw a line, it's not very consistent with where it's at, because this, let me try to draw these, they are actually descending. So it's got this strange descending pattern that pops up. It's almost it almost looks like a bullish flag pattern if it wasn't for the fact that it's well below its averages and they're all upside down. Anyways, it just reacted and had this huge bounce. So here it is, kind of failing back down. Now what I would shoot for as far as something sideways to down on this would be within this range. I want to take into consideration some of these wicks here. And I'm just going to go ahead and draw this box and include the previous pivot point and go down to 49. Now what I mean by the previous pivot point, folks, is this exactly right here is a pivot which kind of coincides with some of these shadows. Right, so I'm like, okay, there's something right around that 54 level that is scaring this stock, and it has rolled over. Now, I don't think 49 breaks immediately, but and it's kind of small here. We're already at $51. But between 51 and 49, some sort of a slow bounce, or excuse me, slow roll downwards, or maybe even a little bounce off 49 with staying within a range. So something diagonalized to the bear side could be interesting. Now, I just got done telling you guys that this is a tough market to find bears in, but this is an underperformer. So maybe a credit spread above 54 would also work. Just something to kind of hedge yourselves out if you're looking for that in the shorter term. All right, so could this latest surge be ahead? I'm sorry. Could this latest surge ahead of an expected dovish Fed? Could the reason for that we have this surge? I worded that really badly, but what I mean by the latest surge is the participation of underperforming sectors. A lot of sectors like energy and utilities had a strong move off the bottom over, I'd say, Thursday of last week up until even recently. Not all of them, but a big bounce. Lots of movement. Maybe it is, maybe it's not. But sentiment change could be seen in the charts, and it's not going to be in our opinion. I kept that from last week. That still holds true today. FOMC announcement tomorrow. We'll see what happens. No action expected, but the market could hang on the Fed speak because a rate cut seems more and more unlikely with the strength seen in the economy, the GDP, employment, the consumer activity, consumer sentiment. I mean, jobs, job openings. We'll see what happens because we do have ADP employment jobless and stuff like that. Payrolls coming out after, but I'm not sure what the Fed can say. Like, yeah, we're going to cut. Wow, there's just too many things that say they're right in line, they're doing great, and I always say this, if it's not broke, don't fix it. We'll see what the Fed does, and more importantly, how the market reacts. Earnings season is in the pig of it, right in the meat. Microsoft and Google, AMD, Starbucks going on right now. For you guys who were following along or want to check it, they're announcing this afternoon. Tomorrow we've got MasterCard, Qualcomm, Boeing, Boston Scientific, and Phillips 66. Just some big names I've thrown out. There'll be more and more to come. So just be aware of that and double, triple check earnings before you make trades unless you're playing specifically for it. All right, let's see what the Fed does. Right now, the markets are expecting something bullish. They're optimistic. The sentiment is still strong, up, bull, +3. You guys heard us tout it. No change. Thanks for joining me, folks, and we'll talk to you next time. Bye, everybody.